into London or tomorrow morning. The only imbalance is if you look on the daily chart on January 11th, Wednesday, that big up candle, if you look at the candle to the right of it on Thursday, January 12th, that candle's low, and on the candle of January 10th, that candle's high. There's a small little fair value gap there. If we were to drop down, and that's a considerable drop, that would be an area for me to watch, because also about midpoint of that wick on the 9th of January. Notice that. Hit halfway between the high and the open of January 9th's candle on the daily chart of ESH2023. Halfway, between that wick's high and the open price of that candle on the 9th is essentially the high of January 10th. I do those little videos like that. I don't need to do those videos. I enjoy them. I could just make them and have no annotations and just trade. And I would entertain myself, but you would get nothing from it. I annotate them so that way you can go into your charts and dig into those areas on even a smaller time frame, or go up to a higher time frame and see what those levels provided in terms of the things I teach. So when I say gun to my head in this situation, I would favor the market trading down into half of the wick on the 13th of January, Friday 13th. So on your daily chart, you should take your Fibonacci. I'm going to do this now so that way you can make sure you're doing it right. Grab your Fibonacci and click it on the low of January 13th, that daily candle, and drag it up to the opening of the candle and drop your Fibonacci there. You should arrive at a price of 3,982.50. 3982.50. Okay. I would favor that level as something to watch going into tonight and into tomorrow.
Good evening, folks. Welcome back. Hope everybody's doing well. All right, so it is Wednesday, January 18th, and time is 8:50 p.m. Eastern Standard Time. I'm going to play a little portion of last night's Twitter space I hosted, and I'm going to take you into the segments where you're going to hear me outline beforehand what you see in your chart and what I'm showing on the screen right now. I want to preface it by saying you can see a lot of support by my students across all venues and social media platforms, be it YouTube, Twitter, Facebook. I have a lot of students all around the world, and I'm very honored to be the mentor to all of you. But sometimes you'll also see folks that are not all that friendly towards me. And while that doesn't bother me so much, it's important for you to understand the distinctions between me and anyone else out there that would either say something that would divert your attention from trying to learn what it is I'm teaching, or cause the doubt of my efficacy as an analyst and or mentor, and the concepts that were authored by me. No one has my Enigma algorithm. No one has cracked it. No one will. And I will not teach it to anyone. So unless you can see someone outline the market and call things like I'm showing you this year and what you're about to hear and what you saw today in the charts, I want to preface it by saying also that while at the time when I was doing the recording and live session last night around 7 o'clock, I started at like 7:20 p.m. Eastern Time on the East Coast of the United States. So I reside presently in Maryland. So I am in New York local time. So I guess it was maybe an hour and a half or so in duration, thereabouts. It was under 2 hours. And I covered a lot of things I think that are beneficial for you to listen to. And I don't host them anywhere else. I know I have a lot of students that record them and download them and some of them host them on their YouTube channel, and I'm okay with that. I don't care so much about doing that. But you'll see there's other records of what I posted, and many people actually listened to that presentation last night before Wednesday's trading even began. And I have been taking the comment section off the videos because it's too much of a glad handing, sugar fest, I love you, ICT, that type of stuff. And while I appreciate it, okay, I'm not trying to say I don't enjoy seeing that and the encouragement that you guys give me as feedback. I don't believe that it is helpful for the general public to see that, because I can still see your comments. The section of the videos where the comments are, it looks like there's no one making a comment. There are. I can read all of your comments, but they're private for me. And to allow that looks like I'm allowing worship and praise and glorification, and I don't want that. So I'm opening the video comment section on this video specifically because I want the viewers that are going to watch this video months, years down the line to see there were folks that were really here. Okay, and I would appreciate if you just take a little bit of time and type out something, not short and sweet, because you can buy comments. Okay, a lot of trolls and a lot of people that are competing against me are paying for comments that make it look like they're supporting their channel. And many of you, obviously, you can see there's very diverse comments in my comment sections of my video, mostly all praise and thanksgiving. I don't want to see that. Okay, like I don't want to see you say I'm the GOAT, I'm the greatest of all time, I'm the best, I'm the king. I don't like those kind of comments. What I'm specifically asking you to leave a comment for is if you listen to me before Wednesday's trading took place in my Twitter space. Okay, if you heard that and it was understood before you saw the chart deliver as it is right now, showing you in this presentation here, please just take a couple minutes. You guys watch my videos for free. I do this for free. I'm asking a very small favor for you to just say, hey, look, I was there, I listened to it, and it panned out like you said. Okay. Now, before I go any further, let me remind you, at the time of that presentation on Twitter last night, I was trying to communicate that before I go to sleep, I don't have a clear-cut scenario for the morning session. Usually I can see it and I know what I'm going to try to do and wait until, what midnight into London does. And I'll usually check that in the morning when I wake up because I don't stay up and trade London anymore. So I try to sleep to keep in schedule and sync with my wife and my children. I make it very clear in that Twitter space, if you listen to the whole thing, when there are times when I don't have a clear-cut directional bias, a narrative to trade in and to hunt a specific setup, then I have to admit to you as the mentor, I'm waiting for more information. And in that Twitter space, and I've done it in other places too, I criticize the majority of Twitter analyst traders, quote unquote, that will give you the squiggly line that if it goes up, it'll do this. If it goes down, it'll do that. And while I admit there are times when, even in my own analysis, I am caught between where the next setup is right now going into the next trading session. So I have to require more information, because if the narrative or setup doesn't appear in the chart while I'm sitting down talking to you, I have nothing I can say, this is what I'm going to key off of, which is what my Twitter account is for. My Twitter is for you to be in contact with me, or more specifically, me in contact with you, while the market hours are taking place. So during the morning session, I'm usually very busy then. And in the PM session, in the afternoon, I'll usually send something. So if I'm thinking the market's going to go to a particular price level, or I'm critical about a specific thing that I'm seeing in the market, I'll tweet it. I'll send the chart. I'll specifically refer to a level, drawing your attention to it. So that way you can use that prompt by me to start watching what price does and see how the things I talk about that create patterns or entry techniques, how they materialize in your chart real time, while trusting my opinion in that tape reading exercise. You're not trying to take a trade, but you're trying to watch price with my experience, 30 years of knowing in my own approach, using my own analysis concepts and lending that to you. So in other words, while it's not a signal service, I am, in those instances, putting your attention on the things I'm watching in my own charts at the same time. I'm not going to give you a stop loss. I'm not going to give you entry technique or buy here, sell here, but I'm going to tell you where I believe the market's going to reach for. So if I'm tweeting a specific level, and if it's above the market price at the time of the tweet, that means I'm presently bullish, looking for a reason for it to go up there. It does not necessarily mean that it's going to go up from that moment. So you have to look for things like a fair value gap, optimal trade entry, bullish order block, something to that effect that would lend an entry. And the reason why I don't do those types of things, number one, I have students that are running signal services, and I would be encroaching on their business. So you wouldn't be able to find an interest in someone else if I'm getting out here and I'm giving you signals. So, and I don't spoon feed like that. I want you to see the chart yourself, and you'll see the pattern that gravitates to you most easily while watching live price action. There's no better way for you to find your own unique model by looking at price with the expectation of someone that's seasoned as an analyst, lend by perspective on what I think the market's going to do, and you watch it on the safety of the sidelines, and that's tape reading. And you do that for months, and it builds an understanding about how to read price. And every educator, every trading methodology, every style or approach of learning trading, I've never seen the emphasis placed on that to the degree that is required. And that's why I tell folks the minimum 6 months and preferably a full calendar year, which is what I'm doing with 2023 mentorship. Live sessions over a chart will begin February 7th, but I'm giving commentary and prompts on Twitter before that. I've been doing it all year. So there's a lot of things I'm not going to talk about in this presentation because you can go over to my Twitter and see the tweets. Okay, there's short little videos. You can see some executions today and how it went to other levels I called, and I'll leave that for your enjoyment and discovery. But going forward, okay, you actually heard me talk about the very specifics of what you're seeing here in the chart. I mentioned how in that Twitter space that this level here, and I mentioned in my weekend commentary before the week actually started, so the video I put up on the YouTube channel, that commentary mentions this particular closing price. That price is 4030.75. So you can see we had difficulty there on Wednesday's trading and on Tuesday's trading, and it was unable to get through that. And I called this specific level in advance to watch that. And because of where it was, the long wick here and all these wicks in here, we were in a period at 7 o'clock last night, at least. We were at a point where I did not have any confidence to side on one narrative or bias for the marketplace going into the morning session or even London. So if I don't have an opinion of what I think it's going to do for London or going into AM session for stock indices, then I have to come to the conclusion that I'm neutral. So a neutral bias is I have to wait for more information. And what information is that? I'm going to allow the 9:30 open, or the opening about 9:30 in New York time, to give me that indication of what it wants to do. So you can see middle of this wick here, that is 3982.50. You hear me mention that at the beginning of the video in last night's Twitter space. This one here is essentially the same thing that's been shown or outlined for this wick. You're getting the middle of that wick measured here. So That's also a level you'll see when we go into lower time frames. And this is the fair value gap I mentioned at the beginning of the Twitter space portion I was showing, or letting you listen to rather. This candle's high on the 10th of January is the exact to the tick low of Wednesday's trading. Now, this is the thing, okay, this is the thing that everybody knows me for in Forex. I'm to the tick, okay, or I'm sorry, to the pip rather, in futures, but I'm also to the pip in Forex. And that's why my analogies with being a sniper trading, you know, kind of like popularized that with Forex and shown executions and shown techniques and concepts that would deliver that. And a lot of my students all around the world are using those things. Okay, order block, smart money concepts, the whole business. The precision that's in futures and in bond trading, you know, 30-year bonds, that it cannot be beaten in terms of precision because it's to the tick most times. Whereas Forex, sometimes I could be off 2 to 3 pips because of the broker spread. Okay, and that's one of the things that was always a frustration for me while trading Forex, is because I don't get the laser precision that I can, and you can see clearly in my examples this year. I'm showing you next level technology in terms of analysis. Stop loss management stops being one tick away and trusting the fact that it won't go there. You cannot pull that off in Forex. And I don't care, anyone can claim they can, they will not be able to demonstrate that consistently, because if they're in a live account, the demo won't open up to grab their order because it doesn't care. It doesn't see an internal pool of liquidity that most brokers are working through. You're trading through their pool of liquidity because most times those brokers are actually trading against you. And because of that, your tight stop loss, they can open the spread, snatch your order, and you're gone. You don't have that so much in futures because everybody has the same price. That's why I can be confident when I have my stops where I have them, and I'm not worried about it getting close to my stop. Because if it's going to go to my stop and stop me out, I'm wrong, and I'm okay with that. But I know if I'm on side, that means I'm correct about what I'm expecting to see in price. The arrays that I'm teaching you, the algorithm will respect. My orders will be behind that. And you've seen dozens of examples of that. And it's uncanny how it just perfectly operates as one would expect if you want laser precision in terms of stop placement and trade targets. Entries, all those things are communicating authorship. It's communicating ownership. Nobody has Enigma but me. No one can do what I'm doing with this information but me. So I'm showing you this year, everybody out there that has been listening to what I'm teaching, or they're not liking the fact that the trading community is warming up to the ideas of the things I'm teaching you and sharing for free and wanting you to be successful with. The competitive side of this business, like anything else, is shady. And they're going to say things, make up things, and claim that they can do something too. They won't ever be able to do what you just seen me do today. They're not going to be able to. Because if they knew what I know, if they knew Enigma, if they knew my algorithm, they would be able to take parts of it like I did last night and explain what I'd be waiting for and how it was going to go to where it was going to go. And you can't beat perfect. This candle's high. I talk about that in last night's Twitter space. I have students that recorded themselves listening to it over a chart, and they posted exactly what I was saying in the Twitter space on their chart on their YouTube channel. So it's transferable. It's not something that's cherry picked. It's not hindsight. It's absolutely on a daily time frame. So I'm teaching you that precision still exists on all time frames. The algorithm is not limited to intraday charts. It's not limited to anything. It's the same price. It has to operate differently on different time frames, and you'll have to submit to obviously longer durations for setups to pan out when you're looking at daily, 4-hour, and hourly charts. But never shy away from willing to be able to engage these markets if you can't be in an intraday basis. Here's your evidence that it works on just daily charts. You can see it forming. You can take setups on a daily chart and just let it pan out. It'll take you time for those positions to come to their targets. But if you're forced to do something outside of intraday charts, you already know what you're waiting, for. It's longer durations. So this candle's high. That was the very low of Wednesday's trading to the tick. It didn't go one tick lower. It didn't come short of it by one tick. It was directly 100% right on, perfectly. And I want you to check your chart too. So look at January 10th. Compare that candle's high to the low on Wednesday, January 18th, 2023. That's perfect, folks. There's no room for improvement. There's no gray area where, well, it was close, but it didn't get there. I don't play horseshoes, and neither does the algorithm. So we're nailing it. And that's a testimony to authorship. That's a testimony of who knows what, who owns Enigma, who engineered it, who wrote it, who coded it, who's proving it. I am not out there calling things incorrectly. I'm giving you the daily range. I'm telling you where the algorithm is going to have periods of consolidation where it can get erratic. Then once things get in alignment, then I'll tell you where I think the market's going to go based on the ideas that the algorithm will deliver. And let my tweets be the testimony of that. Every single day I'm calling it. Every single day my students are seeing it. They're growing in their understanding. And they're not getting signals spoon-fed to them. That's important, because if you're looking for signals, entry technique, stops, and put me in a trade, I'm not going to be helpful to you in that regard. And I don't have an issue with being hated because of that, or being criticized because I don't put you into a trade. I'm not going to be guilted into it. I'm being as responsible as I can, and also respect my students who trained under me and now are running signal services. So I don't want to encroach upon them, because I would be taking their clientele if I went in here and started doing signals. And frankly, I don't want that. I don't want that responsibility. I don't want the headache. So we also had this candle's low, which is 39.61 and I think 3/4, something to that effect. But you'll see it also when you get in the lower time frames. So that was the dynamic with everything explained in the Twitter space last night. And because at the time at 7:20 p.m., I mentioned that I don't have a clear-cut bias because I have to wait until the morning session. So I had to wait and see what we would see in the delivery of price, because anything can happen overnight while I'm sleeping. Anything can happen, at 8:30, before 9:30, and I'm submitting myself to the process of waiting for the opening bell at 9:30. All right, so here's the hourly chart, and that same fair value gap on the daily chart is being shown here. And the fair value gap is the PD array, and the classification for the fair value gap is a BISI, meaning buy side imbalance, sell side inefficiency. So it was delivered on the daily chart with an up candle, and it would be expected to see the algorithm deliver to the downside with sell side. Okay, so you can see that the low is nailing that fair value gap low right to the tick, and we'll get closer when we go into smaller time frames. This morning, I was counseling everyone on Twitter to be mindful that it is very, very choppy, and the highs were suspect. So even though I like the 40-30.75 level, and we've been talking about it since last week, it was one of my targets for upside last week. 40-20 was, and 40-30, and then if it could breach 40-30, maybe trade up into the 40-40 level. And I was given room for that potentially happening today. What I wanted to see, and this would have gotten me in alignment immediately with going short, based on the analysis I gave last night. At 720, because I was not able to give you a clear cut, this is what it's going to reach for. There was no fair value gap to reach for because we were bumping up against that 4030.75 on the daily chart. So that upper boundary on a daily chart in the form of a premium didn't lend well to go beyond that much for a higher fair value gap. So I would be looking for short-term buy stop hunts over this high here. That was 40.35 essentially. So I was watching 40.36. I was mentioning it today in tweets. And I said it could potentially drive up into 40.40. I mentioned that last week, and it was still on my notes as a potential run above this short-term high. Now, if it were to do that, I would have been looking for that to fail and as a turtle soup, fake breakout and go short, sell it, and look for 39.82.5. That's what I was trying to do. I was waiting for that to happen this morning. And I did 2 trades where I was going in long, and I was able to get a partial off into a buy-side liquidity pool, which I'll talk about when we get into lower time frames. But it ended up failing and coming back on my stop, and it took me out on break even on the balance. So it wasn't that big of a deal, but I was proving that, you know, when you're in that environment in between real setups, that I would rather take smaller time frame moves. I can still find those 5 handles, and I proved that this morning. The point of reaching down to that 39.82.5 level, which is this one here, don't be confused with this here. This line is being anchored to the daily chart, the midpoint of that wick, just like this line is being anchored to the previous day, the middle of its wick. So when you do the higher time frame levels and you transpose those same levels into your lower time frame, this being an hourly chart, the lines might look a little differently than they did when you anchored them on the higher time frame. It's not that important. You just got to be mindful where those levels are, because that's exactly what the algorithm is going to refer to. The market doesn't drop, okay? The market doesn't drop because there's a lot of sellers coming in here. The market doesn't drop because it's ran out of buyers either. I know folks that are making money. They got a friend that used to be on the floor trading. They got a buddy that runs a desk at a brokerage firm, okay, or maybe a large institution, and they call that a market maker when they're not, they're a dealer. You'll hear folks talk and say that buying and selling pressure were the catalysts for moves in the marketplace, and that is a misinformation. The markets are absolutely controlled. The algorithms that run price, we are told that high frequency traders are muscling the market. They're not. They're just going in and taking small little pieces like a pack of piranha, or a school of piranha, let's say it that way, where they go in, they take these small bites, but because there's a lot of them working, you know, constantly, they devour the liquidity that's being offered in the marketplace. So that buying and selling pressure that they do is not the be all end all for the rhyme and reason why price goes up and down. The market is going to go where the market's going to go, regardless of how much volume is coming in. How much volume does it take for the S&P to move 10 handles? How much volume does it take for the S&P to move 5 handles? How much volume does it take for the S&P to move 100 handles? How much volume does it take to have the gap opening that we see from when the market closes at 5 p.m. Eastern time and where it opens at 6 p.m.? Sometimes it can gap 20 handles. How much volume did it take to do that? Whatever the first print trade was. See, when you take a step back and you look at things like it really is, you stop listening to the nonsense and the misinformation, and then you can really get to the core reasons as to what's going on. It's all manipulated. It's all controlled. So you have to wait for certain things to appear, and occur in price action. And unless you know what they are, and those things are what I'm teaching you for free, I'm proving them daily. I'm showing precision entries, partial exits, and targets being hit, stop placement and management. I'm calling the levels in the bias beforehand. I'm explaining when the market's going to be choppy and sloppy until it does certain things. That, my friends and neighbors, is proof of authorship. That's a man that's had his hands on this. And you can't argue against it when it's shown to you like this. So when I talk to you this way, I'm not trying to be a braggart. I'm not trying to be egotistical. I'm not trying to be arrogant. I'm speaking from a position of authority. I know what I'm teaching you. You don't know what I'm teaching you. You have no idea where I'm taking you in the lessons. And many of you are just simply overzealous and you want to sound and be like I show in my examples. I don't count candles. There's no counting to a specific number of candles, and that's the secret recipe for Enigma. That's not, Enigma has no reference at all in a chart. So as soon as someone talks to you about how they have Enigma, and they're going to sell you Enigma, or they're going to give you a free access to Enigma, or they can trade and do signals and give you, trades based on Enigma, they have nothing. They have nothing because my algorithm has absolutely nothing to do with a chart. It's all time and price and macros, things that you won't even see in your chart until after it happens. It's before your chart prints. Sorry. The fact that I outlined what I outlined last night, I said, these folks on social media, they'll say, and I hope you understand, I know there's a small segment of my audience that doesn't like me saying these types of things because they get their feelings hurt because they're usually the Instagrammers or the Twitter guys or, something to that effect where they're trying to run Telegram signal rooms and they're pretending to be technical heroes, okay, titans of technical analysis. And they don't like when I talk like this because it sounds like, I'm talking about them specifically when I'm talking about all of them. So when I see folks that are drawing their lines for a bullish scenario if it goes up or a bearish scenario when it goes down, as I was mentioning last night in the Twitter space, you usually see it on Twitter. These folks that have a large following, but they're not ever telling you what they're going to see in the marketplace. It's the both sides of the coin type thing and flip it and see what happens. And either side lands, I'm right, look at this, haha. And the scenarios they even scribble and draw out aren't necessarily exactly what happens in the marketplace, but because a lay audience, neophytes, people that don't really know what's going on, they see, oh, it's higher than wherever he said it was there, and they ignore that person, that pretend trader, teacher, mentor, said both sides. The difference between me is 90% of the time, if I'm talking, number one, I know what I'm talking about because I got a lot to say about it. Two, I prove it. I walk with it. I show the receipts. I call it beforehand. I execute on it. My students are actually doing it without me telling them how to trade it. They're recording it, executing it, and putting it on their YouTube channel and on Twitter. So it's transferable. But there are times, like last night, I was admitting, like I've done many times over the years as a mentor, there are times where I'm personally waiting for more information, and there's nothing wrong with that. I need to see what it wants to do, because once it shows its hand to me, then the manual intervention that can take place that I can't always foresee happening, when that takes place, or when the algorithm gives me the signatures that I know it will follow, then I'm confident I'll go out and say, okay, we're looking for this. But if I'm saying, look, right now we're in a period that requires more information, I'm neutral, that means I'm waiting for the algorithm to do specific things to show me what it wants to do. And then I get in an alignment with that. I love looking for traders that have strong opinions on social media or on YouTube live sessions and they're streaming or if I see them executing on a trade, when I know the algorithm is doing something else, I love that tug of war, because I'm going to go in there with my maximum risk then, because I'm entering at a time when smart money is arm wrestling retail street money. And who do you think is going to win in that competition? Clearly, the neophyte retail trader is going to lose. So I like to look for that, and that's why I like watching certain live streamers. Not all of them are bad traders. I just like listening to them when they're collectively referring to something that's in alignment. They think it's going to go higher, or they think it's going to go lower. And many times when they think it's not going to go anywhere, I'm in there trading it, and it's a good move. So I'm always trying to find those periods where there's a diametrically opposed position held by the retail community, and then that of what I see and understand about my algorithm. So while I do have periods of indecisiveness and I'm waiting for more information, I always, and my students will vouch for this, and folks, if you're a charter member in my private group, which none of you can be, I'm not inviting requests, because I'm not letting anyone do this anymore. This is where I'm teaching now. But my private group students will tell you that in my mentorship, when I was doing daily analysis for them, I would ask them to understand that while I'm waiting for more information, if a gun was held to my head and they said, ICT, you have to tell us what you think is going to happen right now. Even if you think it's 50-50, what do you think is going to happen? So I always use the analogy, gun to my head, this is what I think. Last night at 720, that's what I was saying, because of the fact that 40-30.75, we were at that premium range on the daily chart. Because of that, and because we've already tried going higher several times, and we only had one real run on sell side recently, it's more likely for it to do what you see here. But I wanted to wait and see the morning 9:30 opening. I wanted to see if it would want to run up and take out that Tuesday high, run out to 40.36, and maybe even spike up into 40.40, which was a level I had an interest in last week. So I was submitting myself to the likelihood that we would chop around until we spike up into Tuesday's high or into that 40.40 level. Then I would have been looking for that as a potential to sell short. I would have used that right in there to go short, and then add more as it made more fair value gaps and bearish breakers and bearish institutional order flow entry drills and all the things I look for to go short on. But because it did not deliver that, and it was staying in a range, I just worked inside that small little range. And then obviously, when I seen what I was expecting to see, and we'll look at that now going into the lower time frame, we started seeing a lot of the back and forth choppiness here. Okay. And you might look at this hindsight now, like some of my students actually did after the market started to break down. Their question was, why didn't you see this happening? And why didn't you see that happen? Number one, the risk level was elevated this morning. The uncertainty is high. And I did not want to commit or co-sign anything on the short side until I knew I had a lot of things on my side to justify it. So here's the opening price at midnight here, New York local time. So ideally, if you're trying to trade the daily range, if you're trying to get in there and trade like my algorithm would seek to trade, which is if I'm going to be bearish and selling short, I want to be entering short above the opening price at midnight. Preferably, that's what I'm looking for, because I'm entering in an area where smart money is accumulating the largest portion of their short position for the daily range. I can also utilize the 8:30 opening price, and I can use the 9:30 opening price. So there's three opening prices that I like to use within the 24-hour trading period. All three of them can be utilized uniquely and independent of themselves. But the largest portion of the day can many times form overnight in London, unless we are in consolidations like we have here, where we can see from yesterday morning, we have just been chopping around in this big range. And I wanted to see them take out Tuesday's high. We got close to it, but couldn't spike it up in there. So I was looking for that potential scenario to do that because I was really going to try to nail down the high within a half a point. That's what I was purposely going in there trying to do that. And I was also trying to go long, catching the small points going up. And then I was going to reverse. That's what I was trying to do. So I wanted to show you that I could do those types of things. And I would have been here talking about how, this is what I was aiming to do. And this is why I did it. So because I didn't have that opportunity to see a run above 40.36 or even spike into 40.40, I had to wait for more information on the sell side of things because we didn't get that spike above Tuesday's high. So you can see how we drifted down into 39.82.5 and 39.73 even, which is the daily candle that has both those wicks on the low end of the candle. Split those wicks in half, measure them 50%. You'll get this level and this level, okay? Dropping into a 5-minute chart. Here's a 9:30 opening bell. We wait for that. And we had a lot of choppiness in here, back and forth, and I'm looking for Tuesday's high to be taken out. And we had this buy-side liquidity pull form here. And then it finally punched through it. Created this short-term low here, but notice it didn't take out this low yet. Now, you could argue and say, what about this one here? If, this is what you need to have in your notes, okay, because there's a couple people that had this question in my tweets. I wanted this one to break down more specifically because that was the one that ran from there up into the new higher high and took out this spike over here. So that run here, I wanted to see that one taken out. I was aware of this short-term low, but I was not trying to commit to that because I felt because we were in a larger consolidation, it still might spike up in there and run 40.36 because it failed to do so on this high here. So if it would have spiked above Tuesday's high, then I would have used this low here as a shift in market structure bearish. So when it did this move here, this is what I'm talking about when things are algorithmic. Algorithmic theory relies a whole lot on if this occurs, then that. If this occurs, but not this, then that. So there's a lot of if-then syntax. Everything has to be weighed on decisions that are binary. So there's a series of those discussions that you have to have internally while you're watching price as a trader. This low was not taken out until here. Now, I knew before this low was taken out here that I wanted to go short. And you've seen a tweet, and I'll show it to you in my presentation tonight. But I did not want to take that short-term low here when it broke down here because I felt that this could have been just one more time where it was leading people astray like myself or anyone else that would trust that that high was formed just on that shallow little run with this move here. Because it did not take out Tuesday's high, previous day's trading high, by trading the 40.36. If it would have done that, then this short-term low was broken. Then anything in that high at 40.36 to this low, taking out that low, if there's a fair value gap in there, I would trade that and I would be content with that, riding it down to 39.82.5, as I outlined last night. But I did not trust this high. Now, some of you might say, well, that doesn't sound like the hallmark of a professional. I beg to differ. Because what I just gave you was the logic and the narrative that would require me to use that swing low. And it was not just contrived here because everyone knew in my tweets what I was looking for. I was looking for that 40.36 run, maybe spiking into 40.40. Go look at my tweets. I'm not going to have all the tweets in this presentation. It's important for you to go through my tweets. There isn't going to be that many of them. Now, if you're in your office and you're trying to hide from your boss, it's going to feel like I'm tweeting all the time because you're afraid to get in trouble. I can't make any apologies for that. I'm going to do what I got to do, and you're just going to have to deal with it or turn the notifications off. But if you want to be alerted to what I'm looking for next, then that's the sacrifice you're going to pay. On a busy day, I'm going to tweet a lot. And if you're going to complain to me, just you want to unfollow, because I'll just block you and do the favor for you. So this run here below the short-term low, in perfect hindsight, it looks great. But I can tell you the logic I was waiting on was that spike higher above Tuesday's high. Because we didn't get it, it is what it is. All these levels here, you can see the fair value gap there, trades up into it here. There's a bearish order block you'll see when we get into the 1 minute chart. That's not anything here that's noteworthy. And then we have a fair value gap here, where it trades up into it here, here, and we're in the lunch hour here now. So let's go into a 1 minute chart for the morning session. All right, so here is that low I mentioned on the 5 minute chart. If we would have spiked up to 40.36 and took out Tuesday's high, then break down like it did here and took out that short-term low, then I would have trusted this as a shift in market structure, even though on 1 minute chart we have a gap. It's there. Yes, I've seen it. I was watching it in here, but because this could have very easily ran up and hit that Tuesday high, then I would have had to use the same protocol of using whatever swing low formed from this low up to that higher high at 40.36, which didn't occur, but had it done it here, and I was making allowance for that, it wasn't until we broke below this short-term low there, and as you'll see, and I'll actually show you a tweet where I prompted everybody. I said, any other day, I would use this as an entry to go short and aim for the 40.10 to 40.08 liquidity next, which was over here. Okay, but we broke down. We had a nice little fair value gap in here ahead of the sell side liquidity being tagged, which it does, runs up, fair value gap, and bearish order block. That's a closed candle. It drops down. Now notice that this signal and this signal here forms very close, in close proximity to the midnight opening price. That's what this little purple dotted line is going across the entire chart. So there is two setups that were beautiful if you want to get in alignment with a large range day using Power 3 concept that I teach. And it moves lower. Then we have the order block, which is last up closed candle prior to this displacement, coupled with a fair value gap. Mean threshold trades up into it here, breaks down, attacks sell side below here, expands lower, institutional order flow entry drill, multiple ones here. Institutional order flow entry drill is what you see when I type on my charts and annotations, the IOFED. It's short for institutional order flow entry drill. It's a high frequency trading entry technique where it just goes into and touches the candle that would create a fair value gap or imbalance. All it has to do is touch that, like it does here and here. And high frequency algorithms are going into the marketplace right there. Sometimes it just goes up one tick, but that's usually what they're using, the entry there. Okay, and you can thank me for that one. a lot of firms out there using that one now. So it breaks lower, sell side imbalance, buy side inefficiency, which is a fair value gap, but the classification is SIBI, S-I-B-I. Runs up, reprices till here, leaves it again, bounce price range here. It's not going to go back up into it again. Smash. And drifts into the lunch hour starting. Okay. I'm going to take you into the very moment on the 1 minute chart, and you can see how this was a mess. It was just, this is an entry technique with the fair value gap there. This was a technique here with this fair value gap. I went in here, and when we ran above the buy side, you saw me take a partial there, and it came all the way back down and stopped me on the bounce. This was another one here. I was working with my son, rallied up, and then I was looking for 40.36, and then it come back and stopped me out under here. No fair value gap in here. So even though we have a short-term low here, any one of these could have been misinterpreted. Not so this one here could have been misinterpreted today and utilized as, well, this is the shift in market structure. And because it was multiple ones here, the fact that any one of these were taken out to the downside with price delivery here, without the Tuesday high being taken out, which is what I was making allowance for in my expectations in the morning session. Post 9:30, I wanted to see that run up there. And I didn't want to get caught offside in the event that they were going to do another run up and clear it out. Because then I wouldn't have been able to put on the largest position I would like to do with that fake run to 40.40 or 40.36 blowout of buy side liquidity on Tuesday's high. I would have to use smaller leverage because I would be doing what? Trying to go short and then get caught wrong. They run the stops at 40.36 or 40.40, me be stopped out. Then I have drawdown on the day. Then I can't use my max leverage on my trade, which is usually 6 contracts going in, building up to 10. So because of this shift here and then returning back up into it and me thinking it was going to likely go up to Tuesday's high, I did not trust any of this until we had that short-term low right there taken out there. Then on this tweet, which was me saying it on here, when this candle went up and broke down, I was actually typing this out here. So if you look at the time, it's 10:34. It's showing when you drop it on the Twitter. So if you copy any of my tweets and paste it, right mouse button on the chart anywhere, and then paste the link to any one of my tweets or someone else's tweets, it'll drop it right to where the tweet was made. So this candle here is 10:34 New York local time. But I was typing it out here as it was trading up into this right here, zoomed in, which is a fair value gap. The reason why I felt this candle when it was trading up to here and it was dropping back down, these are all 1 minute candles. So here's what's occurring. I'm seeing something, I'm measuring it internally, verifying it through the things that I know and the logic I'm teaching you and other things that I'm not going to divulge to the public, and you can get upset with me all you want, but what I'm teaching you is already light years ahead of everything else. I have to type it out. I got to type it all out. Sometimes I make a mistake in a typo and I got to go and fix it. And then I press the button and it gets to your device. All of that takes time. So if I'm utilizing a 1 minute chart and I'm saying everything in this candle here, I see it, I want to react to it, and I'm putting it together, and then the next candle shows me here, saying if it was any other day, I'd be short here, which was this candle right in this fair value gap, right there. Now, why would I trust something like that, even though it went through it? Look close. This is institutional order flow. Listen, folks. When this low was taking out, that was when I liked price, because this candle had already ran up and hit the bottom end of these up close candles, that series of candles. This is my bearish order block. Look at the opening price there. It's perfect to the tick. I'm sorry if it hurts your feelings, gurus. I'm sorry if it hurts your feelings, other competitive teachers, but there is no comparison to perfect. Nothing beats perfect. This is what the algorithm does. This is ownership. This is authorship. This is superiority. I'm here to teach. I'm here to prove. And there's nothing better than this. And you can argue and wrestle and be part of the minority, or you can just get with the program here and just say, okay, I want to learn how to do this. You know, I'm going to learn how to read price better, because this is what the market's doing. Whether you like me or my teaching style, this is the market. The market algorithm is coded this way, and there's no changes going to be made to it, okay? So this opening price runs up to it, hits it perfectly, and delivers lower prices. The next candle here creates that fair value gap. And then this candle here, I see it run up into that, and that's when I'm saying, okay, this is where I would be short right as it's doing that. As it runs up and hits the bottom of this candle here at the opening price, stops dead on the right there, perfect delivery to the tick. Then it's trading lower. The next candle trades up. Next candle trades right back up into this candle's opening. Series of 3 up close candles. Opening price, that's my order block, stops it right there, dead in its tracks to the tick. You cannot improve on perfection. When I see this type of signature where it runs up here, I'm expecting it to do immediate repricing lower. Well, the next candle opens down here, runs up, half of the wick, that's consequent encroachment, mean threshold of the up close candle here, perfect delivery, start looking for it to go lower. Here's the afternoon showing the 1:30 to 4:15 time window. Last hour of trading, we'll look at that in a moment. Fair value gap in here, we trade up into it here. We break down, return back to the fair value gap, create another smaller fair value gap. This is a short, that's a short. Sell side below here, rips into it here. If you take this high to that low, expand that lower as a measured move, create this low in your mind as a fulcrum point. The range high to that range low, multiply that, then project it lower equally, and you'll get the range lows that we're seeing here. I told you to use the fair value gap last night in the Twitter space and outlined the very levels, and 49.43.75 was the actual tick low. You can't improve upon that. That's it, hitting it right there. And the market closes at 4:15. Now, after hours, it does trade lower. I don't care about that. I'm teaching you how to operate. At the last portion of the day at 1:30, if you're bearish, you can use the opening price at 1:30. Treat that the same way I teach you to use it on the midnight candle in New York, and at 8:30 and at 9:30. If you're bearish, the market rallies above that opening price, goes into a premium array, as we see here. You can expect this to do what? Sell off, and treat this whole price movement the same way I teach Power 3 for a daily chart. You can treat the same idea of Power 3 within a session. So everything is fractal. The algorithm sees it just like this. Opening price, this is a Judas swing. It's all manipulation up into a premium. Trades lower. Rallies back to the short-term premium array. Trades lower. Fair value gap, trades up into here. This low being taken out here, this is model 2022 right here. Now think, I teach you to trade this at the 9:30 opening, right? Everything is the same. We're just applying it to the market in small little segments the same way my algorithm does. So the logic the algorithm's using is it's using the protraction from this opening price when it's bearish and it still has undelivered targets down here. It's running up, creating a short-term overbought. We don't need an indicator to do that. Trades down, one more time up into a fair value gap, and then because of that, it creates that short-term low. It breaks below that short-term low. Fair value gap, your eye goes right there. From this high down to that low, midpoint equilibrium. So you're looking for a fair value gap at or above equilibrium. Where's it at? There. Trades up into here perfectly. Breaks down. Here's a wick. Where's it trading up to? Midpoint. Right there. There's another sell. So you can sell here. Pyramid. Wait for sell side to be broken there. We're partial, which is the top of the fair value gap on the daily chart. Trades down into midpoint, consequent encroachment. That's a partial. And as it hits here, you don't want to use the low of a fair value gap for your target or partials. You always want to come off of that a little bit. Anywhere between a half a point to a full point, you'll always see me try to do that at the very minimum. Anything more would be, if I have a lot more targets below, which there wasn't below this for me, I would not try to be fancy dancing a perfect exit at the low tick. It's just, there's no need for that. So if you were looking for 39.43 3/4, there's nothing wrong with 39.44 1/4, 39.44 1/2, and be content with if it spikes down to your level. Who cares? You need to have time and offering for liquidity to pair with your limit order, because the market's not sitting down there and hanging out at 39 43 3/4, very long. This is a 1 minute candle. It only goes down there, bam, for 1 second, and it's off of it. So, a little something extra, no extra charge. And the 1 minute chart in the afternoon session, here's that fair value gap from the 5 minute chart inside the New York lunch hour. Extended it out in time. We trade up into it here. We shift lower. Fair value gap trades back up into it here. We break down. Remember, I said once that low was taken out in the afternoon, after it ran up here, once that low is taken out, which it does here, that's a shift in market structure below the 5 minute low. We're seeing it on these individual 1 minute candles. Your eye goes back to what? The 5 minute fair value gap, which is this rectangle here. You may be looking at this and saying, well, what's that anchored to? It's anchored to this. Right there. These two lows here on the 5 minute chart are those single lows on the 1 minute chart that are separated a little bit wider because I had the chart zoomed in. And this run right here is back into the 5 minute fair value gap. Refer to these 2 points here, these two lows and this high. Refer to this rectangle. Think about where we're at, showing this and this with this rectangle. Now watch when we go into the 1 minute chart. That's these two equal lows on the 5 minute chart. When price goes below that, that's a shift in market structure. And then returning back up into that fair value gap, which this rectangle represents the imbalance or fair value gap on the 5 minute chart. I just dropped to a 1 minute chart, and this level is transposed to the 1 minute chart, and it's going to show all the individual 1 minute candles. That's that return into the 5 minute fair value gap. That sell right there. And then here's that run back up into the middle of the wick. You don't see a wick here until there for this time frame, but this is all a wick on the 5 minute chart. And it's trading up here into about half that wick. And then it breaks down, creates a fair value gap here. Here's another partial. How are you getting in here and doing all these partials? You're not seeing every time frame I'm looking at. I'm looking at a 1 minute chart. I'm looking at a 30-second chart. I'm looking at a 15-second chart. So I'm looking for all these things. Once I'm in the right side of the marketplace, I'm going to be hammering. As long as I have room to build into position, I have equity to use and within my risk model, then I'll take every premium array that it gives me, and I'll build the positions up to 10 or 14 or 16 contracts, and then let it go. Fair value gap breaks down. The 3961.75 level also. This is an old daily low, as you can see here. That low, if you don't know what that is drop a horizontal line on 3961.75 and go back up to a daily chart and look back a couple days, and you'll see where that is. That's an old daily low. I mentioned that in a tweet, told everybody to look for that, and it went down into it here. And I did some shorts up in here and covered below that. And then you can watch that recording on Twitter, by the way. But here's another signal forming around a daily low. And folks that say like, oh, well, it's just classic support and resistance. You know, it's nothing new under the sun with ICT. That's bogus. Just because it goes back up to that old daily low, and if I'm bearish, that's not enough for me. Like I have to see something like this fair value gap. I got to see something like an institutional order flow or a bearish breaker. You know, if I don't have a PD array that the algorithm is going to refer to, just because we're below an old daily low and it returns back to it doesn't mean it's a sell. Just because we went above an old high and trade back down to it, that's not necessarily a support or a high probability long entry. So the folks that are argumentative about what they see me show, even with executions, which they'll call cherry picked, which beyond me, I don't know how they could say that because I'm outlining it in tweets, only one-sided, and then executing with the very levels I'm calling with the logic that I'm teaching you for free. They're stuck, okay? And it's fun. My feelings are not hurt by this, but I enjoy seeing it because it's denial. Denial, that's all it is. And they can't accept it, which I take as a compliment. But you can't just simply say, that what I'm showing you is support resistance. I'm showing you what makes support resistance what it is in reality. Imbalances, fair value gaps that get traded to, and when they return back to them later on, that's a real support and resistance level. It's finite. It's not a zone, like a supply and demand zone. It's a very specific level. And there has to be logic, and it has to occur around a specific time. When this occurs here with this fair value gap, and it trades up into it here, what time of day is it? It's during the final hour of trading, between 3 p.m. and 4:15. So this run here, opening price, extending out in time, this is a Judas swing, trades up into a fair value gap, breaks down. Fair value gap, trades up into it, last hour of the day, displacement at a old daily low. There's lots of liquidity that comes in around daily highs and lows. So one of the best things you can do is use your daily chart and use daily highs and lows over the last 3 days. So count today as day one. Your trading day today, whatever that day is, that's day one. Yesterday, whether it be yesterday's trading day or last Friday, if it's like, for instance, if it was, say you're trading on a Tuesday, there's a previous day, that would be day 2 on Monday, and then Friday would be day 3. And if you're trading like today, Wednesday's day 1, that's the trade day you're trading in. You look back to Tuesday, that's day 2, and you look back to Monday, that's day 3. So you look back for daily highs and lows for algorithmic trading. So in short, today, whatever day it would be that you'd be entering the trade, that's day 1. Yesterday is day 2, and the day before yesterday, whether it be going into the previous week, Friday, or whatever the previous day is, that's day 3. You have the highest high and the lowest low of that total range. You have the individual highs and the individual lows. That is a dynamic matrix of liquidity that you will never exhaust for future trade setups, because this is brilliant. You can see them forming all the time. And this is what it kind of looks like right in here. This is a model. This is a specific PD array aligned with an old daily low while bearish. Time of day, last hour trading. So the market runs up, fakes people out, think it's going to low. It's been put in, market breaks down, returns back to a fair value gap, sells off aggressively. Look at the bodies of the candles respecting the fair value gap high. Folks, that's algorithmic. That right there, that's a signature proving what I'm teaching you, that price engine is delivering price based on these very things I have codified. You are seeing the evidence of it. It's undeniable. Then it drifts. The high is the exact high of the fair value gap. The high of this candle is the exact high of the fair value gap. It breaks. Fair value gap. Trades down. Midpoint of the fair value gap, high and low. Consequent encroachment. It reacts to that. Back up to what? The fair value gap. Stops midpoint of that. Consequent encroachment. Trades lower. Comes right back up. Where's it stop? At the bottom of the fair value gap, which is this candle's high. Perfectly. It stops in the midpoint. It stops at the low point. Not some ambiguous level in some supposed supply zone. I am teaching you technical science, not retail mumbo jumbo. I'm sorry if that hurts your feelings, but I have to sometimes grab you by the lapel and shake you and say, look, pay attention. The details here, you can't argue with them. There's none of this exists in supply and demand. It doesn't exist. It doesn't exist in anything else but my work. I didn't have to teach this to you. I didn't have to bring it out to the public. And I'll be honest with you, there are some days where I wish I would have never done it. And I feel guilty by feeling that. I do, because I know I've been gifted with it. And I also know that there are people out there that if they were in my position, they would be abusing it.
And I'm trying to be a good steward with it. And if you don't take advantage of what I'm sharing, I'm not going to be alive forever, right? If the good Lord comes and takes me, you don't have that experience anymore. You have just whatever I've left behind me. And I want you to take advantage of the time I'm willing to share with you, because this year is it. And once it leaves this fair value gap, where's it go? Right down to the fair value gap low, to the tick, and stops. Trades back up. Where does it stop here? Midpoint of the fair value gap right there. Consequent encroachment, stop. What's the chances of that being just buying and selling pressure and they just happen to be right? The trader that goes into the marketplace here, the buyers and sellers right at that price, what's the chances of them just being exactly where the algorithm is going to reprice to for that very logic? What's the chances of the trader meeting another trader right at that price right there to give that tick right at the bottom of that fair value gap? What's the chances of two traders coming together to meet at the consequent encroachment midpoint perfectly right between this candle's low and that candle's high? What's the chances of that randomly happening? What's the chances of every one of these candles open and closes to be exactly on that fair value gap high? What's the chances of that? What's the chances of that candle stopping dead in its tracks right to the tick at the fair value gap high, and this one as well? Folks, listen. At some point, it's absurd to arm wrestle this. It is what it is. It's okay. It's okay. Everybody that believes what they think the market is doing, we all believed it at one point. I did. I believed it too, until my eyes were opened and I saw exactly what goes on. And my hands are all over this. My fingerprints are all over this. And for some of you, that's painful. I'm sorry. I didn't mean for it to be a sharp pointed stick. But you can't change it. You can't undo it. It is what it is. And it's my interest for all of you is to just use the information I'm providing you to make changes in your life while you can. Not all of you are going to get rich. Not all of you are going to find profitability. Some of you are just not going to be disciplined. But it's not going to be a fault of mine. And it's certainly not for a lack of trying on my part, because I'm proving it. My students are proving that it works. I'm proving every day. I'm proving consistency and precision every single day. And that's all I've asked you to do is show up. Because if you show up, I'm going to give you evidence every single day that is absolutely undisputable. So nobody else has my enigma. Nobody else is going to be able to walk the market like I am on a leash in front of everybody publicly. I've tweeted it this morning, was one of the first tweets I put out. The cherry pick challenge. All you have to do is put out there in public where the market's going to go next. A level, not a zone, a specific level. And then you have to engage and trade it, and trade like you see me doing. Very precise entries, stop losses really tight, taking partials along the way at specific elements like I've taught in my content. I'm sorry, but until you actually try to do that, if you don't want to believe what I'm teaching and executing on and showing examples of, and my students are actually doing it too, you're not going to appreciate how difficult this would be to fake. Like, I don't have the focus or the attention span because I have difficulties focusing on anything but one thing at a time. So I have to block out a lot of things that would be distracting. Conversations around me, TVs playing, I can't have that. So whatever I'm doing, I have to be focused on that one thing. And I get irritated if I'm taken off of focus. So I don't have multiple monitors and multiple laptops, recording multiple different setups and then going in and cherry picking this and cherry picking that. No, I have the setup I'm looking for and I'm recording it. If it fails, you see it. I have no problem sharing that.
I showed you this morning. I forced myself to go into the marketplace in the morning, trading exactly how I would trade. If I had a gun to my head, what would I do right now? I was able to get 5 handles, but I wasn't able to hold for the majority of the move to get that liquidity run at 40.36 or 40.40. So, okay, big deal. I don't want to engage in those types of movement. I want to be in when the market's really predisposed to be free to move. Give me 10 handles. Give me 10 handles of a range. Then I'll operate. Then I'll engage. Then I'll go in and participate. I can do a lot of these small little micro moves. What would that look like? Well, we have a fair value gap here. Trades up into that. And let's just say that I don't believe at this moment that it was going to go down to this level here. But I do see this as a sell. How would I trade that? I would look for this low to be taken out right there. So that would be my trade. Going here to here. That's a very, very small little micro range. But that's 2.5 handles that you can get right there. And then do the same thing somewhere else. So there's 2.5 handles there, and there's your 5 handles for the day. But that's not a lot of money. It's only $250. Right. But when you're doing it with 10 contracts, it's $2,500 per day. You have to think modularly. Small little pieces of the elephant is how you devour it. You don't try to swallow it in one bite. Small little incremental moves, and find consistency going in looking for these surgical strikes that repeat over and over and over again. Everything repeats. There are times when the market will go into sloppy consolidations. You want to learn from me this year how to identify that. See what it looks like. And then also study price. Study it. Don't look at me when I tweet you and say, okay, this is low probability. Don't turn your charts off. If you're new, that's not an invitation for you to turn your charts off. That's for you to go in and really study price and contemplate, okay, what you think is going to happen and see how many times you get wrong. So that way you understand this is painful if I try to push. Now, for my seasoned students, they are to turn the charts off and walk away because they understand that they've been here before. A lot of you have just met me this year. A lot of you have seen me before, heard terrible things that aren't true about me, and then said, I'm going to ignore this guy. Okay, he's a scammer, he's a fraud, he can't do anything, he's not showing me anything. That's different when you really take a step into this realm that I've created, and you see proof. You see elements of precision, executions, calling it beforehand, and students that are doing it and making real money. So I believe that this week was very fruitful. We had a very productive week. And because it has delivered what I would reasonably expect for the entire range for the week, I'm done. I'm not going to be doing very much on Twitter, and I won't be doing anything else on YouTube for the rest of the week. So you have plenty to go through and study. You have tweets to look at, you have back testing and things to look at. And I will resume, obviously, going into the weekend. I'll give you my pre-market analysis again on Sunday. And I'll try to do my best to have it up by 11 o'clock on Sunday. But understand that I am a family man. I have a wife that likes to tell me when and when I can't do certain things like anybody else's wife does. And to be happy in a blissful state of marriage, I try to do what I can to keep her happy. So my weekend schedule is obviously in the hands of my family. I can have plans going in, but they dictate everything. In the weekdays, I control everything. But on the weekends, I relinquish that control and allow my family to call the shots. And if they make a decision to take me out of what I would have allotted for my time to do the recording or the analysis, you're just going to have to accept that. Okay, I had several people complain, can you do it earlier? This isn't fair to us. It's got to be fair for me. I'm the guy that's doing it for free, and it has to be something that I can accommodate in my own personal life. And if it doesn't line up with your time, I mean, it's not meant to be, abrasive. I'm not trying to offend any of you or make it harder for you. But also, I'm a real person. I'm not artificial intelligence. I have children. I have a wife. I have a life. I have hobbies. I have things. I'm running businesses. I mean, it's there's other things except for all of you. And then sometimes it feels like there's nobody else but you, but there's a whole lot more things going on. And I do want to help you, but sometimes I have the entitlement-minded students that come to me expecting have it their way mentorship on their time frame and time schedule. And I'm sorry, I just don't like to deal with folks like that. I think that's going to be it for this one. I've had fun this week. I've had a wonderful time sharing, and I put a lot of time in this week, so I'm kind of tired. My energy level is really low, and I'm going to use the rest of the week to rest, so that way I'm charged up for next week. So I wish you a very pleasant week and weekend. Be safe, and I'll touch base with you again on Sunday.